My next guest says that gold miners are at a great valuation right now. Adrian Day is joining me now on the sidelines of the Vancouver Resource Investment Conference. Welcome to Vancouver. Welcome back to the show.
Well, thank you, Daniela. Yes, thank you.
Gold has really taken off, and we're going to look at the metal, and we're going to talk to miners. Let's first get your take on whether you feel the market has legs here. Can this rally hold, Adrian?
Oh, I think so. I mean, it's really only started. I mean, it's only just begun. I think it'll be natural if we see a little bit of backwards and forwards over 1,300. Any psychological number causes a little bit of back and forth. But no, I'm quite bullish on gold. I mean, I think all the factors that made people nervous about gold in the last couple of years, a stronger dollar, higher interest rates, all of those things are now beginning to fade or be discounted.
But we still have a strong equity market.
Yeah.
There's a strong economy, at least there's perception that there's a strong economy. So what do you think was going to be supportive gold prices here?
Well, I think if you look at the stock market, certainly you've got a bond market that's begun to crack. You've got Bitcoin that maybe has cracked. And now you've got the stock market. I think if you have, I'm not looking for a crash in the stock market, but you could easily see valuations of some of these overvalued tech stocks come down. And I think that all supports gold.
How about on the gold mining stock front? What are you liking?
Yeah, but I mean, the gold stocks are very undervalued relative to gold because they've lagged. I mean, as you know, as everybody knows, they've lagged not just in the last 6 months, but they've lagged in the last 7 years.
So it's a better buy for you?
So I think the gold stocks are a better buy right now. To me, the biggest question is less of timing, but more of selection. I think one has to be extremely selective in the gold mining space.
You have to look at the price you're buying at, right? So I'm going to ask you for some picks now, I'm going to ask you for some picks, but it doesn't necessarily mean that it's the right time to buy, because you may have already bought, obviously, right?
Well, anything I recommend, I've already bought by its nature. I mean, so you want me to give some?
Yeah.
Oh gosh, I like I continue to like the big royalty companies. Franco-Nevada's hardly cheap, but that to me is a buy it and put it away. Royal Gold had to drop because of the problem at the Mount Milligan mine. The lack of there was a lack of water. Centerra, the operator, had to suspend milling for a month and suspend full milling for maybe up to 4 months till spring breakup. So the stock dropped, and I think it was a gross overreaction. Because you're only postponing the mining, it's not lost forever. So Royal Gold's a good one, and the Cisco at 11 something US.
So you like gold, obviously, but what about any silver miners, or do you like the new up-and-comers of zinc, lithium, cobalt?
We focus more on the precious metals than we do on some of the other metals, to be honest. Silver we like. Fortuna Silver, I think, it is a great company. Great balance sheet, great operators. They've done everything right, building mines on time, on budget. I think that's still at a good price.
So, just to recap, stocks for you over physical metal?
I think so, but everyone should have physical metal first as an insurance. I mean, you start with physical metal. But if you're asking me what's the better buy right now, I think it's the stocks.
Okay, you're also a speaker here at the show, Adrian. What's your main message?
Well, my main message is that mining is just a very, very difficult business. But unfortunately, a lot of managements have exacerbated problems that are inherent in the mining business by making poor decisions. And the biggest poor decision that most managements made is not being countercyclical. So in 2011, 12, 13, companies were going out buying overpriced marginal properties like drunken sailors, and taking on debt. Debt went up fourfold in those years to buy overpriced assets. And then in 2014-15, when they should be buying, these companies don't have any money and they're trying to reduce debt and blah, blah, blah.
A lot of people come to these conferences trying to see what the next big takeover might be. Obviously, I know you can't comment on that, but do you think we're going to see a lot more mergers and acquisitions?
Well, mergers and acquisitions have gone down a lot, as you know, and there really hasn't been much of a pickup in the last 12 months. You would have thought, with the pickup in gold, you'd have thought some companies would start to. I think there has to be. That's the answer. There has to be. Whether it's this year or next year, there has to be more because the big miners are running out of gold.
Are we at peak gold?
I think we're at peak gold for the foreseeable future.
Not yet.
No, we are. I think last year was the peak production.
Right, because that's one thing, is when are we going to see the next big major? How come we haven't seen, another gold core emerge onto the scene here?
These things, you can't time them. They just come when you've got to have the right person, the right management. I think you're beginning to see that with some companies over the next couple of years. Some of these, the top 20 companies that are running out of deposits, that don't have a good pipeline,
So that's
they're
why
going
the
to
juniors
have
are
to make.
So that's why the juniors are so important, you're saying.
Absolutely.
Got it. Adrian Day, thank you so much for speaking with us.
Thank you very much.
And thanks for watching. We'll have more for you on Kitco.com.